Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's 137th CPE program organized by AASP of ICI for this year. And more than 88,000 members have already benefited from these webinars as well as the CPE programs organized by AASP of ICI. As we all are aware that we have covered various standards on auditing as well as various industry-wise webinars on various key audit consideration in various industry-wise. Today we are going to take two very important standards, that is standard SA 315 and SA 330. Both are very important relating to the risk assessment and assessed risk. So in order to tackle these two very important standards, 315 and 330, we are having with us very eminent, very respected, learned speaker, CA Palak Shahji. So on behalf of AASP of ICI, I extend my warm welcome to you, Palak Shahji, on this AASP platform, Zoom platform for this webinar. And I also thanks to you, sir, for acceding to our request for these very two important standards for the benefit of the members. So before we formally start our today's webinar, it is my proud privilege to share with all of you the brief profile of Palak Shahji. Honorable Chairman AASP as well as Honorable Vice Chairman AASP, both are stuck up in other meetings. So I am taking this liberty to start this webinar. CA Palak Shahji has cleared his Chartered Accountancy course in May 2009 and cleared Diploma in IFRS from akka ACCA in December 2009. He has passed his Bachelor of Commerce from Gujarat University in April 2007. He is working as Associate Director in BSR and Associate LLP Chartered Accountant based out at Ahmedabad since 2011. He is having experience of statutory audit for various sectors like industrial, manufacturing, consumer market, renewable energy, EPC, infrastructure, etc. He is a regular speaker. He has delivered webinars as well as the virtual CP meetings on various platforms of the Institute of Chartered Accountant of India. So he has earlier delivered during the COVID time period as well as before this. He has also delivered certain lectures. So I request our today's learned speaker, CA Palak Shahji, to please deliberate on the topic and enlighten all of us on SA 315 and SA 330. Over to you, sir, please.
Thank you, Anilji. Thank you, everyone, for attending this webinar on risk assessment and response to the assessed risk. It's my privilege to provide the insight on this important topic. Risk assessment is a very important topic, as we all know. Currently, the regulators are very hard on our auditor. As an auditor, we are performing our audit, whether we are planning our audit properly, we are doing a risk assessment, and then documenting our risk assessment procedures or not. So I will take you through both the important standards, standard on SA 315 and 330. Just give me a minute, I'll share my screen. Yeah, is my screen visible?
Yes, sir. Yes, sir. Perfect, sir.
Okay. Thank you. Yeah. So we are taking two important standards, SA 315, identifying and assessing the risk of material misstatement through understanding the entity and its environment, and SA 330, the auditor's response to those assessed risks, which we have identified in SA 315. So both the topics are more relevant in the period where we are discussing currently. Normally, as an auditor, we do our risk assessment in our select season, like in December or January, where we have adequate time to perform. When many of you as a members would be doing a large listed companies, many of them doing the audit of central bank auditors. So all those auditors would require to perform the risk assessment before they actually do the audit during the busy period. So this risk assessment is very critical. Normally, this risk assessment start after our preliminary activities and acceptance procedures. In case of a continuing nature of client, we can just start. There is a very limited requirement for acceptance formalities, but we can then start on the risk assessment. we need, as an auditor, we are required to perform the risk assessment. We need to understand our entity in its environment, identify and assess the risk of material misstatement. So objective as an auditor is to identify and assess the risk of material misstatement, either due to fraud or error, at the financial statement level, at the assertion level, through understanding the entity and its environment, including internal financial controls, thereby providing the basis for designing and implementing the response to the assessed risk of material misstatement. This actually help us as an auditor to reduce the risk to acceptably low level. So there are various mechanisms through which we can assess our risk. As an auditor, there are various factors. So we will go through that, why risk assessment is important. We'll go to that aspect as well. Yeah. So why risk assessment? Then what are the factors as an auditor we need to consider for the risk assessment? What is the understanding of the business entity? Why the ELCs are important in the risk assessment, and then identifying the risk of material misstatement, particularly with respect to the fraud and the significant risk that we will cover. So why risk assessment is important in the context of SA 315 and our audits? Actually, risk assessment helps the auditors to identify the risk timely, so that you have an adequate time to devote the important areas of audit. You can perform your procedure, you can plan your procedures, you can identify the areas, and how you can plan along with the management, you can address those problems on a timely basis. You can organize the engagement overall in a very efficient and effective manner to assist it can help the engagement partner for the selection of appropriate level of capabilities and competence. Considering the current environment, there are various complexities can be involved. If as an auditor, we have performed the risk assessment on a timely basis, we have identified what are the issues. So as an auditor, you can address those risks, as well as what are the right set of competence required to perform those particular audit areas. Is there any significant risk additionally which you identify if you're doing an audit for the second or third year? So historically, you are aware these are your risk. Basis the current year, if basis your risk assessment, you may find additional risk. For example, till last year the company was earning good, but while performing the risk assessment for the current year, you identified that the company was not performing well. The prices of the products have declined significantly. Some of the products have become obsolete. Technology of the product which was on which the company was manufacturing has become an obsolete in the current. So this all activities which you perform during your risk assessment help us. So there is an additional indicator to identify the risk. This risk actually says that there can be the company is making loss because of this. Then you could identify the risk on impairment of the property, plant, and equipment. And so if you identify now upfront, you can discuss with the management also, and you can also plan your audit procedure on a timely basis. So then whether the management has also planned any such activities as a part of their internal control or not, you can discuss with them, and accordingly you can plan your audit procedure. And last one, where relevant, for adequate coordination of work done by the component auditors and experts. Many of you would be doing a large group audits wherein there are certain auditors who are certain components which are audited by other auditors. So basis your risk assessment at a group level, you can communicate and can discuss what are the risks which you have identified at group level which are relevant to the component teams also, and then you can communicate those risks to the components, and can ask the audit procedure you are expecting from them in accordance with the SA 315. Yes. So now, what are the factors as an auditor we should consider while performing our risk assessment procedures? Entity and its environment. What is the relevant industry in which your audit client is working? What are the external factors? What are the technologies? What are the products? What are the manufacturing facilities? Which is the financial reporting framework? What is the regulatory and legal and framework applicable to company? Is there any change in the framework? What is the ownership structure? Who are the promoters? Who are the key managerial personnel? Or what is the governance structure? How the segregation of duties being identified? whether how the accounting policies has been determined, whether those are in line with the accounting standards, whether they are in line with the industry practice. What is the process of the management to review their own financial performance? How the management is identifying the related party transactions? What is the overall control environment? How is the culture of honesty and ethical behavior at the client level? These are all the factors which, as an auditor, we should consider while performing a risk assessment. Each and every factor is important to address if we identify any risk, and accordingly we should plan our audit procedures either through a controls approach, a design of the controls, or the substantive procedures. Other factors which we can consider are the process. What is the process identified by the entity with respect to the risk, whether related to the business risk, how they are estimating the significance of the risk, and how they are identifying the likelihood of their occurrence of this particular risk, how they are planning an action on those risks to address them. What is the IT environment? How many systems are there? How many transactions are being in the entity? How the transactions are initiated, recorded, processed, or corrected, or how the accounting records and supporting information are being maintained, and how they're linked to the or agreed to the financial statement. How the system captures the events and conditions that are significant to the financial statement. What is the financials reporting? How the financial reporting process is used by the entity, including how the accounting estimates are being identified by the management, and how the disclosure are being made. What are the controls surrounding the journal entries, including the non-standard journal entries? Considering all the journal entries are considered to be a management overhead of control under SA 240 also. So we need to, as a part of our risk assessment, need to consider what are the controls around the journal entries. Are the journal entries being passed by the limited people, or whether the posting of the journal entries is being routed to the those charged with governance? How these activities are being performed by the company? How is the communication of the financial reporting roles and responsibility is being carried out by the company? How the communication between the management and those charged with governance being carried out? Whether how they are meeting, are there a regular meeting of board and the risk management committee or an audit committee being held on a timely basis? Whether those discussions are adequately monetized? Whether the tone at the top is clear? What are the objectives and targets the company has established for themselves? What is how is the staff, how is the organization is functioning according with the tone? And what is the external communications which available with respect to regulatory authorities? Suppose in case of a listed company, you will have a communication with your investor presentation, you will have an analyst report. There is a communication or with the regulator also, like SEBI. Is there any notice which the company has received from the stock exchange? What are the communications company has made to the stock exchange? All these communications and all the documentation needs to be considered in your risk assessment to plan or assess the risk. Are there any risk basis this? And then other factors we can consider are internal function of the management. What is the scope of an internal auditor? Who is the internal auditor? Is an internal team, or the firm or the company has hired an external firm? What is the size of the internal function vis-a-vis the organized structure? If this whether it is an adequate or not? What are the internal controls the company has? Whether the risk control metrics being prepared by the company, whether the design of those controls are being adequately documented by the company. Then you basis your the financial performance on the interim period, you can perform your planning analytical review. What are the results on the planning analytical review? The planning analytical review can help to understand any unusual transaction, any new transactions, which can help to plan the audit procedure. Suppose in a case of revenue, we see the company was having a revenue of around 100 million last year. This year, during the interim period, you observe that company has achieved 300 million revenue in the interim period itself. You can see what are the reasons for that, and basis that you can plan your audit procedure. Are the customers the company has acquired a new customer, and is the price has increased significantly? Whether the production capacity has increased, whether sales quantity increased, all those factors should be considered then. What is the findings at the time of acceptance of the audit? You have to come across some certain findings on your acceptance process. What are those findings? Are they relevant in your risk assessment? And considering you may be doing this audit historically, what are your experience in the previous audit? Are there any material misstatement which you identified in any of your audit financial statement caption in the previous year? What are the controls? Are there any deficiency or significant control deficiency, significant deficiency or material weakness which you identified during? What are the management improvement points you have recommended during the previous cycle of audit? What are the actions the company has taken on those suggestions? How is the or management culture on our suggestions? Whether those are all improved or not? Those all aspects should be considered in your risk assessment procedures. And normally, when the risk assessment is carried out, so risk assessment is carried out at each phase of audit, at planning also, during the course of audit also, and near to completion also. So at the planning stage, we perform the risk assessment to identify the risk of material misstatement at the financial statement or account balance level or in a certain level. During the course of audit, we consider the risk assessment to perform the procedures on the risk identified, and near to completion to assess basis the audit procedures performed. As an auditor, do we feel is there any revision required on the risk assessment? Whether as an auditor we need to perform any additional audit procedures? Those aspects are to be considered while in the risk assessment. And one important aspect is risk assessment is a continual and iterative process that begins after the completion of preliminary activities and acceptance. So it is an ongoing activity. Risk normally the mindset is the risk assessment. It's to be performed at the planning stage. Once it is done, it's done. Then nothing to be looked at. But no, risk assessment is a ongoing process. It is to be carried out throughout the audit. Yeah, the one of the important aspect which we discussed on the risk assessment is understanding the business and of the entity. So what are the relevant industry? What are the revenue stream? What are the product being manufactured and sold? How many production facilities are there? What are the number of warehouses, number of branches are there? Which some of this will help us to see whether any multi-location audit would be triggered or not. Whether any group or what are the accounting system are being followed for each plant? Are the accounting systems are different? Are the structure or organization structure for both the plants are different, or the same team or same CEO is handling? Some of these aspects help us to determine our audit approach also. So these are all very critical. What are the financial reporting framework? What is the ownership structure? What are the selection of the accounting policy the company has made whether they are in framework of the accounting standards or not? And what is the process of review of the entity's financial performance? Yes. So now we can start with what we should understand under the business. So we should understand the role of the IT. What are the related party relationship and the transactions? How the management is identifying the related party? What are the controls around the related party identification and the transactions? Whether those transactions are whether the identification of the related party by the company is adequate or not. Whether the transaction with related party are adequately approved by the audit committee and board or not. What is the status of the management's going concern assessment? Whether the management has carried out their own going concern assessment or not. Is the management checking, is there any trigger on going concern or not? And one important aspect is also that the risk assessment discussion are to be taken with all the key members of the engagement team, including your specialists and also those responsible for the audit of the components. What we should consider, what we need to additionally understand, the understanding in the entity and its environment, we should also understand the what is the entity's objectives and strategy. What are the measurements and review of the financial performance, entity's financial and non-financial information by performing the analytical review. While we understand the related party and related party transactions, what do we mean by the related party? How the management has identified that process, whether they are complying with the company law, whether they are complying with the SEBI regulations. Why do we need to gain the understanding of the related party relationship? Why it is important? How the company is complying with the company law requirement then? What transaction with the related party give rise to the higher risk of material misstatement in the financial statement? Then the transaction with the unrelated. Whether the transactions are carried out in the arm's length what is the management assessment on arm's length, whether the company is adequately documenting on arm's length or not. What are the procedures the company has followed to ensure that those transactions are at arm's length? Then understanding the status of management going concern. We should consider if there are any indicators the entity may not be a going concern. We inquire of the management and consider any action which may be necessary if the indicators exist. If the management has not made an assessment, then we inquire of them and agree the procedures they should perform to agree on the assess on the going concern. And understanding the IT environment of the entity, under the risk assessment, we should understand which part of the business are affected by the IT. Whether the company is dependent heavily on the IT. What is the IT strategy of the company? To what extent does the IT is supporting the management decision? Were there changes in the IT environment? Is the environment is very complex? Are there more than 2 IT systems within the organization? To what does the IT generate the information? Are there any reports which the company is using from the IT system? For example, some of the companies use the aging report for their review of the collections. So, are the reports are complete and accurate? So, those aspects needs to be assessed. And as an auditor, then we should plan an audit procedure. As an auditor, are we planning to rely on the IT system or not? Basis that we should frame our audit response. Then business risk and the other risk. As an audit, as a company is dealing with the internal pressures and external pressure, there are various business risks involved. Like there are the risk with respect to technology obsolescence. There is a risk due to external factors. There is a regulatory pressure. So what are the business risks the company has identified and how the company has assessed them? Those aspects we should consider and understand from the company while you're performing your risk assessment. So, if I have to summarize the risk, it is in the inherent risk which you understand basis the understanding the business and environment. You perform basis the risk identified. You perform your design of you identify what are the risk. You identify the what could go wrong. Basis that you perform your design of the controls and you perform your testing of the operating effectiveness of controls. Basis though, then you perform your substantive to address your detection risk, and this is how after performing all these activities you address your audit risk. Yes. So, business risk is a risk resulting from significant conditions or events, circumstances, actions, or inactions that could adversely affect the entity's ability to achieve its objectives and execute its strategies, or from the setting of the inappropriate objectives or strategies. So, this is very important. As a company, how they are setting up their objectives, are they in line with the market expectation? Are there any unrealistic target the company is setting? These are all help us to identify and assess our audit response. If the company is setting up unrealistic revenue targets, then there is a risk that the company can inflate the revenue to meet those targets, even though it's practically not possible. So, as an auditor, then it gives us an audit risk to identify the company can commit any fraud with respect to revenue recognition. Though, as an auditor, then we should plan our audit response basis that. What is inherent risk? The susceptibility of an assertion about the class of transactions, account balance, or disclosure to a misstatement that could be material either individually or aggregated with the other misstatement before the consideration of any related controls. So inherent risk is always considered at a gross level. So when I say gross level, it's a net of without considering the controls has they put in by the management on those risks. What are the significant risks? The significant risk is a risk of material misstatement that, in auditor's judgment, requires a special audit consideration. So there are factors which will come on when the risk can be considered as a significant risk. We'll come to that. What is the risk of material misstatement? A risk that the financial statement are materially misstatement prior to the performance of the audit procedure. This is the risk which we identify during a risk assessment procedure based on our understanding of the business entity and environment. It's it's reading or their inquiring with the management, inquiring with those charged with governance, inquiring with their internal auditors, reading of their minutes of meeting with the board of directors, shareholders, those charged with governance, etc. So one of the important aspect in the risk assessment is to understand the entity level control, its entity and its environment. So according to the guidance on the same, the criteria can be established by the company by for ICFR by considering the essential components of internal control in SA 315. So what are the components of entity level controls? So so components of internal entity level control like control environment, risk assessment, monitoring, information communication, and control activities. So if you see on the right hand side, so control environment is more applicable for the entity level, and the control activities, while the actual control being performed at the ground level, like the process level controls, are more applicable at the transaction level. So how the control activities are performed or being performed, we can say it can be more driven through the control environment that the management or the company has set in. When we say what control environment, what does it mean? So when you say control environment, how the company has established the risk management policy, what is the segregation of duties the company has performed between to perform the transactions, whether the company has maintained risk management policy or not, whether risks are being reviewed on a timely basis or not, what is the mechanism of the review of the financial statement by the company, whether those controls are being if are performed on a timely basis, what is the review on the company if the company has significant litigations, whether those charged with governance and the board are adequately reviewing those litigations which can have a significant impact. What is the risk on the what is the control over the budget preparation, and how the budget is being reviewed, whether the actual versus budget review is being happened at a granular level, whether the variances are adequately discussed and documented in the minutes. These are all other part, we can say, the part of control environment. What is the culture on what is the how the culture on the ethical behavior and integrity is being communicated across the organization. What are the actions the company has taken on the competency of the of or each staff on their training, timely training of the or each staff, which for the work they are performing. These are all very relevant from the control environment, and this is why if you see the entity level control on the left hand side comes more. So at the planning stage, our focus is understanding how the entity's internal control operates at the entity level. Then we'll see at the process level. Yeah. As we discussed, the control environment encompasses the integrity, ethical value, and behavior of the KMPs also. Enforcement of integrity, how the enforcement being made at what are the how the company, like in the company is listed, how the insider trading regulations being communicated to all the staff, whether they are compliant with the those SEBI regulation on insider trading or not. What is management commitment to competence? That is about the training, how the training being imparted to all the staff on a timely basis, so that the task assigned to them they are performing on a proper manner. What is the participation and the governance and oversight by those charged with governance, whether the CSR committee, like audit committee, being looked at by those charged with governance or not, whether the risk management structure, how the structure of the each of the committees being defined. What is the organization, the structure? So how the roles are being defined, how the authority has been provided to each, and a responsibility has been assigned to each and every individual in the organization. What are the management control on the conciseness and operating cycle? What are the HR policies and practices, and how they are being followed strictly by the, and how they are how the company is ensuring that all the employees are there in any HR training is being imparted by the HR team to their employees. They are they doing a timely session on the HR policies? What are the what are the good to have practices, and what prohibited practices whether the company is communicating to all the employees? The auditor must evaluate the control environment at the company. As a part of evaluating the control environment, the auditor should assess what is the management philosophy and operating style, because what is the tone at the top will drive the entire organization actually. So that is very important. What is management philosophy, and how the sound integrity and ethical values are. And the auditor should also assess the board and audit committee understand the exercise the oversight responsibility over the financial reporting and internal control. If the audit committee is not performing its duty well, then and an auditor, it also increases our risk, right? So yeah, what as a under the entity level controls in the risk assessment and monitoring, we should obtain the understanding of whether the entity has a process to identify the business risk, estimating the significance of risk, assessing the likelihood of their occurrence, determine the actions to address those risks. If the entity has not established the risk assessment process or as an ad hoc process, then we should, as an auditor, we should inquire of the management whether the business risk relevant to the financial reporting objectives have been identified and how they have been addressed. Evaluate whether the absence of documented risk assessment process is appropriate. Determine whether the absence of documented risk assessment process represents a significant deficiency in the internal. When you do a monitoring of this controls, you should understand the activities implemented by the management and overseen by those charged with governance. Inquire of the management about the source of the information it uses to monitor those activities. And monitoring is a process of assessing the effectiveness of the performance of internal control, determining whether controls are operating as intended, and determining the internal control systems are modified as appropriate for changes in conditions. While we understand the controls, you should also understand the information systems and how the communication is being taking place. So you should, as an auditor, we should obtain the understanding of the information system, including the related business processes which are relevant to that the process and the financial reporting. Understand how the entity communicates the financial response reporting roles and responsibilities, and any matters that are significant to the financial reporting, including communication between the management and those charged with governance, external communications, and understanding the entity's communication process. We should, as an auditor, we should consider the duties and control responsibilities. Communication channels being implemented by the company. What are the accounting policies and changes to the process? Adequacy of those communications lines, timely follow-up on the actions, ethical standards being followed, and the monitoring and compliance of each of these requirements. Once we understand, we monitor, we assess, then as an auditor, we need to document also our understanding. Because now the regulators are also focusing on the same. Unless we document what our understanding is, then we cannot demonstrate what work we have done, right? So we should document the procedures to obtain the understanding of the components internal control, our understanding of the element of the control environment, the audit evidence that supports our conclusion, that elements of control environment in operation, our understanding of the management risk assessment process, our understanding of monitoring activities implemented by the management, the audit evidence that support our conclusion that the elements of monitoring activities are in operation, our understanding of the internal audit function. So our understanding of the management communication process relevant to the financial reporting. In case of an organization which have multiple plants, multiple branches or divisions, how they are communicating the head office, how the head office is communicating on the financial closing process to each of the plants and the branches. What are the reportings that they have implemented for the smoothly closure of whether those controls are being properly implemented or not. Those aspects, as an auditor, we should assess in our risk assessment activities. And then the source of information from which we understand. So we should also try to document which are the source of each of the documents or understanding which we create during the risk assessment process. So while we understand the entity and environment, we would come across a certain elements in our understanding which could trigger a fraud risk or a significant risk. So we'll come to both of this. What is a fraud risk and what is a significant risk? So while we do the understanding of the whether we could have and understanding in the entity level controls, we come across the fraud indicator or the fraud risk indicator or the identification of the significant risk. Yeah. So while as we discuss what we do in our preliminary risk assessment activities, we perform the inquiries of the management, analytical review, we minutes of the shareholders, board, viewing the operations, what are the press releases, or information obtained from the continuous procedures, information from the other engagement for the same entity, what is the knowledge from the previous year, our audit team discussion, and then entity and environment, including the internal control, the nature of the business, understanding the entity level controls, own risk assessment, consider the principal risk identified by the group, internal reports, the inherent risk, like the significant risk, all the standard audit activities and procedures, but need to be explicitly pulled together to demonstrate how this will influence the assessment of the risk. So when we come to the significant risk, the risk that requires special audit consideration in the auditor's judgment. So risk which could arise due to significant economic accounting development, like a new accounting standard being implemented, like a sector issues like complex new supplier arrangement, any significant warranty provisions, complexity of transaction, like the company has done some big acquisitions. There is a significant new contract with the third parties. Then the risk could be either significant transactions with the related parties, the high volume of transaction with the suppliers and customers that are related parties, which are in the not in an ordinary course of business. The degree of the subjectivity is involved. There is a significant estimate is involved, like there's an annual impairment review. In the case of a business combination, we would come up across the purchase price allocation, deferred asset recognition, subjectivity over the forecasted. Because if your company is incurring a loss in the company's planning to recognize deferred asset on it, then the subjectivity involved over the meeting the realization of deferred tax asset through future forecasted taxable profits. So those are all required. So these are all the factors which are considered while concluding whether the risk is a significant risk or not. Then the fraud risk. Fraud is an intentional act by one or more individuals amongst the management, by the TCWG, employee, or a third parties, involving the use of deception to obtain the unjust or illegal advantage. Fraud can be accomplished through a fraudulent financial reporting or a misappropriation of assets. Risk of material misstatement due to fraud are always a significant risk. So in most of the listed companies where we are performing the our audit, considering the significant pressure and incentive on the top management, we always considered the revenue recognition as a significant risk, and there is and accordingly considering the fraud factors are also assessed, because there is an incentive or a pressure on the part of the management, so we consider the fraud risk also. So there is a fraud triangle, and there's the SA 240 also on what are the and for each of the point there are the factors there's an needs to be considered for the incentive pressure. What is is there any opportunity? Because when can opportunity arise to commit a fraud? When there is a weak control environment. So fraud risk should also be considered at a gross level without considering the controls. With in case of, because to address the fraud risk, the company would have put in additional controls also. But for the to address the risk as an auditor, we should always consider the risk at a gross level. Yeah. Then the identifying the risk on the fraud and the response. So we should obtain the information how to identify the risk of material misstatement due to fraud. Identify the risk due to fraud. Then determine the response to the risk of the fraud. And this is not a linear process, but an iterative process. So that this is because the risk assessment itself is not a one-time activity. It is a continuous activity. Okay. So source of the information to identify the risk of material misstatement due to fraud is inquiries of the management, inquiries with the non-financial person. Like as an auditor, we can meet the non-financial person in the dispatch or in the production, whether they have a undue pressure to to stock up the goods and to dispatch the goods. We can do that inquiry also. We can also make an inquiry to the financial reporting person who have been asked to post the manual journal entries without any evidence. So that also we can also perform an analytical review. We should consider the fraud risk factors which are available in the fraud triangle. Observations from the engagement team discussion. This can help us also, and any significant other information available. These are all we can consider in our assessing the fraud risk. One of the important aspects in the risk assessment to address the fraud risk or the due to risk of material misstatement due to fraud or error is to perform the analytical review at the planning stage. So here we have given one example where we can see that the revenue has increased by around 16%. Gross profit has increased around 86%. Operating income has increased by around 3,000%. while receivable increased 160%, inventory has declined, restructuring accrual is also increased, and cash flow from operation is also negative. So this gives an unusual actually a picture if you see, because one side we see the gross profit is increasing, but my cash flow from operation is negative. My revenues increase only by 16%, but my receivables increase by 659%. My inventory is negative, but my gross profit is significantly higher. So this indicates an unusual trend. So this can be overproduction capacity. So there can be the unusual entries like crediting the consumption without proper consumption. There could be various other reasons. So this creates a risk while we review this numbers and we see the variance analysis. So then we should plan our risk. We should plan our audit procedure surrounding that. And considering the voluminous data in the current environment, as an auditor we are dealing, we should plan the usage of the data analytics tool, the planning and risk assessment level only. So this information, because the data analytics help us to penetration of the data at a more than 100%. So it helps us to identify the right set of help us to ask the right set of questions, to deep dive into each and every transaction to give us the right set of and give us a more than a reasonable assurance also as an auditor. What are the other information which should be gathered? So we should use the information that we gather from the various sources and consider following, like what are the type of risk, what is the magnitude of the risk, what is the likelihood that risk will result in material misstatement, and what is the pervasive of that risk. In general, we respond to the fraud risk in the following ways: a response that has an overall effect on how the audit is conducted, a response to the identified risk involving the nature, timing, and extent of audit procedures, a response involving the performance of certain procedures to address the fraud risk involving the management overhead of control, a response to address the risk of material misstatement due to fraud associated with the related parties. So these are all the factors which needs to be considered in when you respond to the fraud risk. So another aspect which we discuss in the fraud risk is the management overhead of control. So management overhead of control is relevant even in the case of the control environment, because there is a risk that material misstatement due to fraud often happens involving the manipulation of the financial reporting process regarding the inappropriate or unauthorized journal entries. So as we discussed in one of our earlier slide, that we should always discuss or inquire with the financial the person who are involved in the posting the journal entries. Whether we should inquire with them whether he is pressurized to post the unauthorized or any journal entries without any adequate documents. This is very important. So as an audit strategy that incorporated controls testing will not address this, even though we perform the control testing, because management overhead of control happens with the not a single person, with the more than one person conniving with each other. So this is very critical. Okay, so we will how to perform the audit procedures or to address the risk around the management overhead of controls. So we can do examine the journal entries and other adjustment with the emphasis on the related party transaction. We should review the accounting estimates. And are there any evidence of management bias? We should evaluate the business rationale for significant unusual transaction if they're being entered into. We should go through the minutes of meeting, and we should see are there any new agreements have been entered into which are not usual in nature. Are there any from the board minutes? You may also identify the companies giving any loans. You should also consider the outcome of your analytical procedures performed. These are all should be considered while assessing the management overhead of controls. So at the end, when we identify the risk on the either significant risk or the fraud risk, we should document it. So what is a significant risk and the fraud risk that the auditor, as an auditor, we have identified? What is the description and what is the rationale of identifying them as a significant or a fraud risk? What are the significant accounts or assertions are being impacted due to identification of the significant risk or the fraud risk? What is the system architecture? Is there any information produced by the entity which is dependent on those risks? What is the audit strategy? The controls and substantive testing as an auditor we have planned to address those. What are the consideration at a group level? Are the group consideration also the similar at the which we defined at the company level? What as an how the professional skepticism as an auditor or audit team we are planning? How we are planning our communication on those types of governance? How we are communicating? What the audit procedures we are planning? And in the completion stage, how we are performing our audit procedure and communication on audit procedure perform on those risks identified, and what are the conclusions on our procedures, and whether we are communicating our conclusions on the performance of the procedures on the significant risk and the fraud risk to the those charged with governance or not. Yeah. Thank you. Any questions, guys? Anilji?
Thank you, sir.
Yeah.
Sir, I have received two questions yet.
Okay.
Sir, please enlighten the extent and level of documentation that should be done in each year
Okay.
when the auditor has been doing audit of unit for the past many years, say 10
Yeah.
years.
Yes. So, as we, I'll just give my input on this, because we issue an audit opinion on each and every year financial statement. The extent of documentation will not change. We have to continue doing the same rigor while documenting the audit procedures. While we can take the help of our previous audits which we have done, like understanding the process, understanding the if you go to the standard also, we have a benefit of doing dual testing. We can do roll forward testing also for the controls. So those benefits we can take. But yeah, there is no option not to document if we are done in the 1 year and not, because we issue each audit opinion on each for each year.
Sir, is business owner health issue would be covered under any risk?
If it is the single owner company, then definitely yes, because then it can impact the going concern. So of the organization itself, unless the organization is run by four five directors, it's a company, and there are and suppose and the owner himself is only knowing the customers, and there are still long outstanding from the customer. If the person is not available or not there, then how these receivables will be and who is then taking care of after if he's not available. Those needs to be considered in risk assessment then.
So for a small company of the size of turnover, say around 10 crores, like you can say SMEs, how much documentation and work for a small company?
Yes. So if we there is while the rigor of documentation is we can say it's less. Like in a normal company, a small company, like an SME, we know they don't prepare the risk control matrix. They don't have a well-documented policy, well-documented policies, processes. So if we go to the standard, also they allow us to perform those through performing our inquiries and monetizing those processes. That is available. That is permissible.
Sir, how to mitigate the risk, or you can say assess the risk in case of stock market transactions?
Stock market transaction.
Yes.
So
how to assess the risk in case of stock market transactions?
So what is the exact question? Stock market transaction. If the company is engaged in a stock market, then for them it's a normal recurring business. But if the company is not in that business, suppose there is a manufacturing company is doing in the stock market transaction, then it's not a normal course of business or normal course of transaction. It's a non-recurring, unusual transaction. Then we should see what are the nature of transactions the company is conducting, why they are conducting.
So one member is requesting to share some knowledge about preparation of risk metrics and tools used for such risk assessment.
So I think in the guidance note now on IFC, there is I think format given for the at least risk control metrics, but not for the tools. But they have provided our institute has provided a guidance in the guidance note itself. What should be the broad risk control metrics for each of the processes. So member can take use of that.
Yes, sir.
Yeah.
So what are the key points to assess risk, and how can we able to find out the probable areas where risk is materialized?
So when the risk is materialized, like in case of a revenue, when you assess the transaction and there is an expectation, so you should assess whether after the risk is identified and the risk has materialized, whether any further audit evidence can be obtained while performing other audit procedure or through controls or a substantive to reduce that risk. If the risk is getting is mitigated through performing this controls and substantive, we should mitigate those risks. After performing the controls and substantive procedures, we are not able to address the risk, and there are misstatements being identified by the auditor. Then we should accordingly see is there any impact, what is the level of misstatement, whether it's material or not, and if it is material, then we should accordingly consider its impact on the audit report.
Sir, what are the key points to assess risk, and how can we able to find out the risk? And risk management is important nowadays, as we all are aware. How a CA firm can assess risk factor in adding to the financial institution?
Financial institution, you can see what is their objective first of all. What like understanding your business and what are the advances being given, whether any single party being given a large advances in a single year. So you can these are all factors you should consider. What is the profile of the key managerial person? What is the control environment on the organization? How the delegation of roles and responsibility carried out by the institution itself. Those are all the factors we should consider, which are available in the SA also in the 315.
So one member is asking, is it response to risk assessment means how the risk is dealt and resolved or otherwise reported in the audit report?
Yes. So when we say response to the risk of material misstatements means while we identify the risk, we have to address this risk by performing our audit procedures. So while initially as the initial plan of audit, we identify all the risk. What are the risks involved? Basis the understanding the environment through reading the literature available, like minutes of meeting, through analysis report, through going through the organ structure, their risk control matrix. We understand what are the company doing, and basis that we identify the risk. Basis that we plan our audit response through design what we identify what are the what could go wrong. And then we design the control and perform our substantive procedures around it. If those risks are getting mitigated through performing this procedure, then there is no impact on the audit report. But if we are not able to get the sufficient appropriate audit evidence by performing these procedures, then there could be a potential impact on the audit report basis the gravity or the severity of this misstatement.
Yes, sir. So our risk assessment results and our responses thereof against to be documented.
Yes. Work not documented is not done. In the recent future, I think NFRA chairman has also said the same thing, which is we have learned in articleship also, that work not documented is not done.
Sir, in digital era, what special precautions to be taken while auditing, taking into consideration the risk assessment?
Yeah, so in the digital era where the company which you are auditing is relying heavily on the IT, you should, as an auditor, should plan the involvement of an IT specialist. So nowadays, many audit firms have now started engaging the IT specialist in the audit. So you should test the controls around the IT system. And what are the application controls? As all you will be aware, in the IT, from the IT system perspective, like there are general IT controls and then there are the application controls. So application controls are the controls as an auditor which we rely. Like there is in case of a revenue, there is a control that a price cannot be changed once from the and price at the time of invoice generation, the price is taken from the price master, and price master cannot be changed except the IT head. So as an order, this is an application control which you want to rely. So suppose this IT system is on SAP or Oracle. So as you need to involve your IT specialist to check whether the IT system can be compromised or not. If you are able to rely on the IT system, then you should rely and perform your audit procedures. Considering the digital era, there is a lot of reliance being done by the companies also on the IT systems.
Sir, please enlighten on criteria for classification of risk as high, medium, and low based on the operational, financial, and IT system criteria.
Based on the IT system criteria. So based on the
Yes.
IT system criteria, there is no risk of material misstatement either due to high, low, or medium. But definitely there are factors like what are for example, for identifying the significant risk, there are the factors become: are there any unusual transactions? Are the transaction require significant estimation uncertainty? Whether the transaction are with the significant transaction being carried out with the related parties without normal course of business. These are all the factors needs to be considered while assessing the risk on high, low, or medium. But if you're dependent on IT system, there is no as such classification unless you are not able to rely on the IT system. So if you're not able to rely on the IT system, because as an auditor you believe that IT system is not functioning as intended, then you need to increase your sample size. You need to perform more samples through a substantive procedure. So when you rely on the IT systems, you take a controls approach. So then
Yes,
it helps
sir.
us to reduce your samples in the substantive procedure through test of details. But if you are not able to rely on the IT system, then it will increase your samples through a substantive sample testing. And if you are able to get the sufficient and appropriate audit evidence through substantive testing, then you will able to conclude that there is no risk of material misstatement at a particular financial statement caption item or account balance.
Sir, is there any index which can measure the level of risk in the organization, say high or moderate or low?
No, according to my knowledge.
Ji. One question is relating to how to make risk assessment process efficient and effective in case of the small entity, covering the cost and time wise.
In the small entities, I will suggest which I was suppose even I am also doing some of the small entities. So what I am doing, you can spend a very limited time in your Slack season, like in February and March. You can perform relevant inquiries. You can and understand what are the updates, and basis you can plan your audit approach without involving your audit team, and you can get a fair idea what's going on in the company in a small entity. And then as agreed with your client, you can plan your main audit in the somewhere in June or July as per your agreement with the client.
So there is a overlapping of areas of internal control assessment and risk management assessment. So how to correlate and cope up with the same?
Both are interlinked actually. They are not independent actually. So risk assessment and the internal control are interlinked. So internal control, you can say it's a part of your risk assessment activity only.
Sir, can you help in guiding us the sort of documentation required to reboot the significant risk on revenue?
So, and there are factors. If we go to SA 240, there are factors. So, for revenue, considering significant risk, we have a triangle also where we can say there is an opportunity there is an opportunity, there is a incentive or a pressure on the management, and there is an attitude to commit or fraud. So those are there, and for each of this item, there is a factors being provided in the SA 240. Like if it is an incentive or pressure, in case of a listed company, if or a company having a significant debt, they have a pressure to inflate the revenue or to show a higher EBITDA. Right, those are all the factors where we should give a response for each of the factors, and we can then determine whether it is a significant risk or not.
Sir, can you please guide us in the role of ERM in risk assessment and risk management?
So ERM is also part of your risk control matrix. So while ERM also considers the operational controls also, while in the risk control matrix also we do consider by in test as an auditor in testing, we don't rely on the operation controls. But if the risk control matrix is properly designed, then it can address some of the items in the ERM also.
So last question. So what if the group company provide advance in the form of ICD and renew every year? What should consider in the risk assessment?
First of all, if you are a holding company, that is what I understand, right? And we have provided the advance, and to the group company, when I'm given to a subsidiary or a promoter company, I will assume that, right? This is the question, Anil?
Yes, sir.
Okay. So in that question, if the company is giving advances every year, I will understand what is the nature of advance, what is the term of advance, what is the reason or the purpose of this advance. Okay. If there is a adequate purpose, like the advance is given for the purchase of material from the group company, then I will see. And what is the age of advance also? That also I will consider. If while I'm giving the advances every year, whether they are being adequately settled or not, or they are still accumulating only every year. Then in addition, I will also consider the compliance also with the company law, and if the company is listed, then the with the SEBI regulations also, and section 185, 186, and all these are compliance we will see.
So one more question pop up relating to the IT member is saying what steps to be taken when an enterprise migrates data from one accounting software to the other in the connection with the risk.
So there are two aspects. When you do a migration from one IT system to another, well, I'm not IT specialist, but I have practically dealt, so I can answer to some extent. So while you migrate from one IT system to another IT system, you need to check two aspects. One is a database migration, and the second is your configuration migration. So while database migration is very simple, that is what I understand. But your main is a configuration migration. How this is being carried out in the new IT system, and what are the changes that's being done by the company, and whether the whatever the changes in the configurations are made are being adequately approved or not from the control risk perspective. Because while some of the configurations were there in the previous IT system, on which you as an auditor will be relying on, those configurations would have been changed in the new IT system. How the segregation of duties being defined in the new IT system. What are the controls being placed on the in the user access review in the new IT system? How the controls around the user revocation on the resignation or the of the employee being placed in the new IT system. These are all the factors which needs to be considered. Have the production environment, who is the super user, whether those controls which are there in the earlier IT system have been adequately migrated, not those needs to be. And one important aspect which I recollect is the program development control. We call it as a PD control. Whether that program development has been carried out properly or not. As an auditor, we need to test on the migration of the system.
Sir, in case of Tally, one can modify entries in the backdate, or one cannot restrict cash payment beyond the limit. So, would this qualify as a system risk? If yes, what audit procedures may be adopted and how to qualify?
So normally, basis my practical experience, we don't rely on the Tally is a IT system for the controls. So in the case of where we are not able to rely on the IT system for the purpose of control, we normally increase the substantive testing, and we increase our sample size to see whether any misstatement is there or not in the financial statement item or not.
So now we come to an end, sir. Thank you so much on behalf of AASP of ICI for sparing your valuable time
Thank you,
and
sir.
enlighten all our members with your expertise for this SA315 and SA330. Thank you so
Yes.
much, sir. Thank you.
Thank you, sir.
Thank you, sir. Thank you.